Hello and welcome to this week's closing bell. As ever, I'm joining the star of the show, Murray Dawes, as we chat through what's going on in the markets this week. And it's been an interesting week. So we've got three things that we're going to talk about. One is the situation with Iran and Israel. Obviously, that's a major impact on global markets right now, and what most see is happening off the charts of the Aussie market this week. We're going to talk about a little idea that Murray threw out the other week, direct stock, see how that's traveling, and he's going to update us on what's happening there. And then we're going to look at a contrarian opportunity, whether it's time to get interested or whether it's worth watching or to avoid as a complete dog. So we'll talk about that as well. Murray, how are you
I'm
going?
good, mate. Plenty of dogs out there.
Absolutely. Let's start with the war. So both you and I, just before we came on, had the same idea that everything seems to be grinding to a halt all of a sudden, and that's understandable when you get a big uncertainty like this. Markets go into wait mode. They don't like uncertainty. We don't know what Trump's going to do in terms of escalating the situation. Is that your read of the situation?
Yeah, well, I mean, we don't, in 2 weeks, Trump might drop a bunker busting bomb into a mountainside in Iran. I mean, it's not really a normal thing for us to be thinking about. Straits of Hormuz, oil markets going crazy. It's pretty serious. I mean, usually you can, expect that these geopolitical things they blow over. And look, this might be the same thing, that they might come to the negotiating table next week and say, oh yeah, we've given up on our our nuclear ambitions, and that's it. And then all of a sudden, maybe we do have a massive breakout to new all-time highs, and everyone gets very excited by that. So we really are at a point of decision time, and I think people are positioning themselves. We've had the big smashing because of the tariffs. We've had a huge bounce back. So I think really everyone's just sitting around scratching their heads at the moment, going, well, yeah, what do I do? I don't really want to buy it up here, but I don't really want to sell it either. So what I'm doing, we're still long all the positions. I actually went into a stock yesterday, which I like for outside of the market. It's a special issue sort of situation, which I'm willing to go into. Still long all the stocks that we've been carrying. We never really dumped anything in a panic during the big sell-off, but I'm not necessarily wanting to step up today to add on lots of risk. So it's a bit of a wait and see time.
Absolutely. So, I mean, that's your sentiments are pretty much, I would imagine, be across the board from everywhere. So it's hard to get super bullish on anything unless you had a very direct catalyst that could only override all these concerns. It would take feel like a big mineral discovery or something to really drive a certain stock up. Did you want to bring up the chart of the ASX 200 there?
Yeah. Let's have a quick look. Just because short term, I'm thinking we're at a bit of a high. I think the risk is to the downside, but I mean, big picture, everything's still bullish. So let's have a look, and I want to show you some examples of the triple top.
Just before, while you're bringing up the chart, Muzzle, we're both broadcasting from home today. The office is being refurbished, and of course, getting your leather chair and large desk
Yeah,
and
I need.
your whiskey
I wanted
cabinet
more
over to
space.
the
I
new
need
office.
the beer fridge as well. So
Absolutely. So, plus a little mini golf system, and
and
you're
I
over at
want to be able
office.
to putt. My practicing for my putting. It's not big enough in my office. So
So that aside, that's why we're not in the studio today, but we will have a new studio from next week, I
yeah,
believe.
that's
At
it.
least that's what Belvedere says. All right, to the chart.
Okay, to the chart. So here we have a weekly chart of the ASX 200, and pretty clearly, long term, we're trending higher over multiple years. This is going back to 2015. This green line here is just really like a 5-year moving average, and I just find as long as the market's holding above that, it's usually pretty bullish until the market sort of heads below that area. You've got to stay fairly bullish. So anything I say right now, it's saying I'm bearish within a very short time frame. And it's saying it could sell off from here, but I'm not saying, oh my God, the market's just about to crash, anything like that. So I just want to start off with that. And what I wanted to say was, when we have these big sell-offs, and this is where I've been a bit wary, when we have a really sharp move like this, which has gone to retest major support, and then the quick bounce back and it's overbought in the short term, and then retests that high, which is, again, there's another high there. There's really three of them. It's sort of like a possibility of a triple top, where I'm a bit wary that it can actually turn down quite rapidly from there. So what I've been watching is, okay, we got a new high last week, but then this week we've had selling come in, and we're actually going to finish the week with a weekly sell pivot. So that's just the first sign. Weekly trend still up, daily trend probably on the edge of turning down. So everything's still big picture bullish, but just short term, that weekly sell pivot for me, I need to see the weekly buy pivot now to not to turn bullish, really bullish. So now I'm just going, this is a moment to be wary, because that weekly sell pivot could be the starting gun for at least a retracement, at least a bit of a sell off. And who knows, maybe then we get good news and we take off again.
Well, just as you're describing that, I'm just saying, look at what's going on in iron ore at the moment. Now, it's starting to show some weakness. Now, with so much of the top 10 derived from what iron ore is happening with BHP and Rio and Fortescue, again, it's just hard to get super bullish on the index with that in mind.
Yeah, absolutely. And if I'm just going to go back on these triple tops, just to show you in the past where you have these, a major high, we had a multi-year rally there going into 21, and you have these sharp sell-off, which then go back to retest the high and get rejected. So there was a big sell-off there. You got another retest, so that's that triple top, and then you get the weekly sell pivot there. So then look what happened after that. Bang. Which went back to the 5-year moving average. So that's just where we are. And if I just go out again, I've seen a few times in the past where these major sort of highs occur from that sort of a idea of a double or triple top. And I just want to just point it out so people can know, that there is the history there. And this is going back into, 97, that sort of thing. You can see all those retests of the highs before failure, even through here. You'd call that a triple top through there. And again, this is similar to what we're seeing here, where we saw the big sell-off, and you can see that going to the 5-year moving average. So that's showing you the initial volatility. That's actually going into 2001, the 9/11. And then it rallied all the way back to the high in a straight line to retest it. Was overbought in the short term. And there you've got that double, triple top, and then that was actually the beginning of the sell-off into the Iraq War in 03, before it then turned up. And also, through here, another retests where you get the initial wave down, then a sharp rally all the way back to the high, but then that runs out of puff when it retests the high, and then that's when you get the really big sell-off. So these double and triple tops, they are often how markets sort of finish their moves. And we have had the warning of this really sharp selling from a few months ago, and we've got all this uncertainty around. So just for now, weekly sell pivot, it's already overbought in the short term. Look, big picture, it's all really bullish. And, if we break out, if it all of a sudden we have a bit of a sell-off and then it turns and busts up to new all-time highs, I mean, great, I'll be jumping in with you, soaking up as many stocks as we can, because it might go on a massive run. Because maybe after this big selling, a lot of those fund managers have got underweight, and now it's run straight back to the high again. They're still underweight, so they're probably not ready to buy yet. But if then the market does keep running, probably people are going to be going, I'm a bit underweight. I've actually got to buy into that buying. So if we end up with great news in the next few weeks, everything gets sorted, they come to the negotiating table, they don't drop a massive bomb on them, maybe the market will turn and fly. So I'm willing to go change my tack pretty quickly, but for the moment, I think the risk is to the downside.
Well, let's just pause on that for a moment, because what you're talking about is the general index. Now, as we're talking about here, it's very hard to see it really busting out anytime soon. And again, with iron ore and the earnings growth in Australia, it's not that big. So hard to see a big lift. But it doesn't mean you can't make money from the market, but then it pushes you to looking at individual stocks. Now, there's two things we need to get through there. We're going to talk about one stock idea of yours, but we should also say that there's a sector-led opportunity down in microcaps. You've covered that sector for a long time, but we do have a new guy coming in to really dominate that space. He's doing a series of presentations and talking about it. So if you are interested in microcap opportunities, we'll put the link to what he's doing where you can sign up to that and see what that's about. And what I'm driving at is because I cover the small cap sector, right, which is higher again than the microcaps. Individually, there are a lot of stocks that have the potential to do or to deliver good alpha, and I've seen that with a couple of mine rip up this year. And so, if you're looking for opportunities, they could come lower down, away from those big stocks that are very driven by sentiment and positioning and all that stuff and the passive flows that we've seen with Commonwealth Bank. But my style is always to prefer the catalyst with the individual stocks. So you're not relying on the general market lifting it up. If you can find them, they can really work for you. Now, you brought one up a couple of weeks ago. I can't remember
It was
exactly
a few
when
months
it
ago,
was.
yeah.
Oh, it was a few months ago, was
A
it?
few months ago.
Walk us through that.
For people in Closing Bell. And so what we're looking at here is Ad Veritas. And they have been spending years trying to build this product, which is helping marketing companies and those sort of people with their online marketing to counteract the number of bot clicks that you get that end up costing marketing budgets massive amounts of money. Up to 40% of their marketing budget spend can be on, fake clicks and that sort of thing. So it's a really big problem out there with, when you've got that much money on the line, if they can come up with good solutions, there's certainly a lot of money to be made. And they've got two big competitors in the US that are, much deeper pockets than them. But they've been nimble. They've got some really good guys backing the company. And I said a few months ago that, look, it was starting to look interesting from a technical perspective, and they are actually starting to get some runs on the board with online betting companies. And they're also looking at e-commerce and different verticals that they're moving into, but they are actually getting some traction and some revenue starting to happen, and getting good responses from the clients that use them. How much budget they end up saving by getting real-time knowledge on who's fake and who's not and that sort of thing. So looking at this one technically, I actually gave it to Closing Bell people around here, and I think it caused a bit of a buying frenzy there, and then it's had another little wave down. But you can see here, it really is starting to turn up. They've just done a capital raising the other day, and I think about 8.5 million or something. And they did it. They were trading at 10.5 cents, and they actually got it away at 10 cents, and it was oversubscribed. So you had a really good capital raising go through there with a very small discount. In these tiny little companies, often it's a lot lower than that. So means there's really good demand. And it was from current institutional shareholders and new shareholders as well. And it was oversubscribed and at a very small discount. So that tells me that there's latent demand still coming.
And just looking at the chart there, when it's bottomed out there, you've got a series of higher lows, as any classic technical analyst would talk about.
Yeah, exactly.
As it's slowly working its way back up.
Yep. You see from this low, if we just follow this along, I mean, look at that. That's pretty classic, isn't it? Right? Rally. And you know how I look at these things. I look at the waves that they come along, and I look at the buy zones. So if we look at this most recent wave to the upside, you can see there's a nice major wave to the upside there, took it through to 13 cents. And then this is when I was sort of telling Closing Bell people, you might be guys watching this who got on, let us know in the comments if you did get on this. And you can see this most recent wave, it had another wave down into the buy zone there. And here we are taking off, and you can see it actually went to the sell zone, back to the midpoint, and now here it is taking off. So you're sort of looking at the potential here of this rounding bottom, getting through 13 cents, getting back above 10 cents. If the buying can come in, it is an interesting sort of situation, especially because revenues are coming through. And it's been a tough old road for this company for a while. You can see it rallied up to...
I was going to say, when you look at the past history, it does spike up.
It's been tough, right? So it got up to 27 cents or whatever, And, again, let's take it through the technicals of why I look at things the way I do. Here's that wave there. And so here's your buy zone around here. And here's sorry, I'll get it properly. So here's your sell zone of that wave. Here's your buy zone of that wave. And so then I sort of analyze things based on that. And you can see it really just bounced around down to the buy zone, up to the sell zone, couldn't do it, down to the buy zone again, tried to rally, couldn't do it. And then it went on a really bad, remember, this is the sell-off over the last few years where all microcap sector just got pummeled. And if you weren't making money, people and interest rates were flying higher. If you weren't making money, everyone was like, well, I'm not touching you. And so we had a
Yeah.
real big clear out. And this is where this rounding bottom.
Big clear. Microcaps, let me just preface this. As a sector, they have been absolutely
Yeah.
creamed for 3 years.
Yeah.
Absolutely creamed.
Yeah. And this is where there might be great opportunities. That's perfect timing with, microcaps really turning and running now because they're all on their knees. So the ones that are going to survive and that have got a good model that could be getting close to making money, you'll be picking them up for pennies on the dollar.
And I mean, I've been writing about this in Fat Tail Daily. The signs of liquidity coming back to the smaller end of the market are there. We've got lower interest rates coming in. They're going to stimulate housing. In fact, I was talking to a fund manager about this this week. You've got a few more IPOs coming to market. Remember, they totally died in the ass as well. So all the signs that kind of risk-seeking, growth-seeking behavior, and that's reflected in that chart there. It's starting to, and the fundies that have the flexibility to go lower, they know that the growth is going to be at the smaller end of the stocks, not in the big BHPs and all that sort of stuff. And I mean, at what price can you keep going into Commonwealth Bank before
Yeah, I know, but
before it doesn't make
yeah, it's so funny. Commonwealth Bank, who knows? But maybe it needs to go to $300 before it collapses to 100. It's that passive money flow and momentum chases. I mean, it just gets a life of its own. But looking at this one,
so?
uh, you know,
So from your model though, does that mean you wait for another retracement then?
on this,
Yeah.
well, no, well, I mean, I'm just saying I've put people into it, and I'm giving them an update saying, look, it's looking really good, and with that announcement of the capital raising and it going really well, very low discount, very oversubscribed, and now the buyers are coming in, and it's actually lent. They just did the capital raising at 10 cents, and it's trading up at 12. So there may be a bit of an overhang. Some of those people who took the shares at 10 cents, they'll probably be happy with it taking 20% on some of it and lowering their risk a bit. So there probably will be some stock around here, and you might be able to pick it up a bit cheaper, closer to that capital raising level. But big picture, this is now looking pretty interesting to me. And I hope
I was going to say too, like I'm the small cap guy as well. So July you get no doubt they'll do a quarterly update. That'll be an important catalyst to
you see whether they're getting real
reassure the
momentum
market.
in there.
Yeah,
Yeah, and because
assuming
they're
they do.
actually doing deals with they want to do deals with agencies which have lots of clients and then take to them, hey, we've got this deal we can give you with these guys that can help you, save heaps on your marketing budget. And then all of a sudden they've got this agency which is marketing to all of their clients their product. So if they can do deals with them, and all of a sudden you go, wow, I've just got access to the top 500 companies in America or whatever it is, and now they're being shown this product. So all of a sudden revenues could really leap if they prove themselves with the return on investment, which is massive. Because you think if you're losing millions and millions of dollars, and you don't have to pay much for this product to be able to save that much money, you're going to look at it pretty closely, even though there are other competitors with deeper pockets. These guys are getting a little niche, and they've got little ways of differentiating themselves from the big boys. That
And another thing I'll say too, I don't know in particular with this one, but I'm seeing a lot of takeover activity at the small end because all these businesses got so creamed that bigger firms just come in and go, oh, we'll have that little asset kind of thing. And some of the premiums are pretty big. PointsBet there's a bidding war over that one is just one example. I had a couple taken over last year. There was Virgin Money, Capital Health, Tito Minerals in the gold space. There's lots of corporate activity, so I expect to see that in the microcap sector. All right, well, there's an idea to follow for you if you're interested in that. Now, this morning I sprung an idea on Murray Dawes for a chart to take a look at it, and he's going to do it for us. It's Pilbara Minerals, and I'll just explain why. So this is a book called Stella by a guy called Tony Seba. Now, back in 2014, Tony Seba wrote a book called Clean Energy Disruption. He said solar was coming to basically wipe out the fossil fuel industry, and he suggested electric cars would come to dominate the auto industry. I can't remember if he talks about Tesla in the book, but he probably did. But if you look at the gain in Tesla's price since then, you'd have to say Tony Seba got it bang on. And the reason I bring him up there is, again, he emphasizes that as far as he's concerned, solar is going to disrupt the energy industry. Now, a lot of people have strong views about the energy transition, how long it's going to take. It's not working in some places, it works in others. There's nuclear in the mix now. So it's a very big topic. But the reason I bring it up is the lithium sector, like the microcap sector, has been absolutely smashed for 3 years. Yeah. Absolutely hammered, with mines shutting down, put into care and maintenance. The price is basically not profitable except for the very, very lowest cost producers. Now, it's been an absolute disaster if you're holding into those stocks. I keep flirting with this idea that they're going to come back at some point. And if there's one thing I know about commodities is that when they're out of favor, they get hammered. But if you can get in at the right time and ride them back up, if there is a next up, you can make a lot of money. So, but you could have said that about uranium from 2009 to 2020. Sorry, it was a long way. Yeah. But there was big money there. So I thought I'd get most to take a look at Pilbara Minerals, because if Tony Seba's right, lithium will have its day in the sun again. But the question is when. So charting can help us with the timing. We know Pilbara Minerals is probably the best lithium asset in Australia that you can get on the stock market. I think there's one other one that's, is it Greenbushes Buzz? I can't remember, but that has the lowest cost. But Pilbara is
the lithium.
Huge long life. It's got a lot of cash, but it's had a huge rally all those years. And then it's gone all the way back down.
Albemarle.
So let's have a look. It's still in a downtrend,
So it's Albemarle is the one that is the huge one offshore. And they have been absolutely killed. And so
now, I'm preempting the discussion in the sense that the lithium prices is still very weak. So there's no real sign from the industry that things are going to turn around. So it's like, again, the old age question, is this a value trap or a potential opportunity? So let's see how it shapes up for you, Mos.
Yeah, well...
And remember, I'm just springing this on Murray as we speak.
Well, yeah, I mean, the first thing I'd say, I'm going to look at Albemarle first because it is a bit of a bellwether for the whole sector. And when we look at the chart, with what I do, looking for these areas where the market may turn around, with these buy zones and sell zones and what have you, I don't just go and buy in a buy zone. You've got to wait for signs of life. You've got to wait for is there enough buyers to turn the tide here on a monthly chart or a whatever it is, because that can stop you from making some really bad decisions, catching a falling knife. Because if a stock's going like that, it could actually just keep going.
Absolutely.
So you actually want to make sure you're seeing signs of life. So if I look at this Albemarle chart over the long term and we have a look at this, it's a pretty beautiful rally that it had for a long time. Again, these big rallies, the big corrections, that's the thing, back to the buy zone. There's a big wave higher there, back to the buy zone. Then it got another big wave higher. This took it to $340. Now look at the absolute collapse that we've seen since. And it went into monthly downtrend a few years ago. And it's pretty much been hugging the 10-month moving average ever since, and is still in that monthly downtrend. So I'd be wary of touching that with a barge pole until it actually based and turned into a monthly uptrend. Like, you'd still get it really early if things were going to turn up.
Again, yeah, there's absolutely no rush on any of
this. There's no rush.
Accumulate.
And also, as it's going down, and I'm looking at this, and it's actually going through some pretty key areas where it's right back at the old low. So it could be getting near the end of this whole move. But boy, it's been very destructive. And if you look at the monthly, there's the lowest month in the move. So there's the high of that bar. So I really need it to have a monthly close above that for starters. So that's up at around $72. So look, if it can end up doing that, then all of a sudden you've got a monthly buy pivot from a major support like you've got here. There's the last monthly buy pivot there. And also the long-term trend turned up. So that was then the opportunity when it took off. But here you can see it's still well and truly in downtrend. All the bars are still, key bars are still marching down. I mean, that's still looking like it's on the nose, and you've got to just wait. You've just got to wait until you get signs of life. So let's jump to, so that's the first thing to say, the bellwether is still looking pretty shocking.
Yep.
And if we look at PLS, it's a similar story, but I guess it's surviving a bit better than Albemarle is even. I don't even know if that's how you say the name. I'm just going off what I read. Albemarle, I don't know.
Well, it's American, isn't it?
Yeah. So
It'd be Albemarle.
So here's PLS. There's the beautiful run, 2020 up to 2023, and that took it from near zero to what, $5, over $5. So that was a massive run.
Just as a little story here, in 2020, I gave a recommendation in a trading service to buy Liontown Resources. It went up 80% in a month. I took the win. It end up going up 1,000%. So that's how big these commodity runs can be when they really
crazy.
go. Not that that's going to happen now, but yeah.
But then what people don't love is the fact that they can do that and then that. And I can tell you what is usually happening is the retail punters are usually buying it up here when it is already run, and they're going, oh my God, I can't miss out on this. This is awesome. And they spend a year or two in the money and thinking they're going to make millions. And then they're the guys that are dumping it down here in a panic. And that's just how the way of the world.
And just, I would say, there's quite an unusual chart shape for both of these because the boom was so big, but then the collapse has been so fast. I mean,
serious.
it got totally overboard
Yeah.
by the end. And then it's just the price has just tanked, just relentlessly tanked. Normally it's more of a grinding, when you get a chart.
Well, I
These
think
ones
part
are
of it
really
is
just-
China deliberately tanking things and trying to scare off competition in a lot of these things. But also there's been a very big shift in, and this is part of my trade yesterday, there's been a big shift in this expectation that EVs are going to take over the world and that it's going to be a straight line growth in their demand, and when by 2030 they'll be, whatever percent of the overall market. I mean, that whole story's dead. It just hasn't come through. And hybrids are really the one that makes sense from an energy perspective and an efficiency perspective, that they're a really nice balance between using the battery and the and ICE, using a normal engine and whatever, and managing that energy flow. They actually work pretty well from that perspective, where you've got that really heavy battery for an EV, and it's costly to produce the battery anyway from an energy perspective, and it's very costly to lug it around from an energy efficiency perspective. So the EVs, people are on the nose. They may come back and end up taking over. That's fine. But as far as the timeline that we all had about what it was going to look like, what the demand profile was going to look like, I mean, that's now very much in question of how long it's going to take. So lithium might take a bit longer than people expect, but I think you're right that at some point everyone's going to go, oh, wow, it still is necessary and it's still going to end up being a very important part of the future mix.
Because I'll just reference the gold sector. I mean, gold it peaked in 2020, 21. I can't remember exactly with its stocks. They trended down into 2022, which wasn't until late 2022. And then gold started lifting again, and then all those stocks started to rally again. So it is a wild ride with commodities. They move in big swings, but usually if you can get at least keep an eye on them while they're down in the dumps, if things start to improve, you start to see that sentiment come back and all that sort of stuff. So it is interesting to watch. So as far as you're concerned at the moment, it's too early. We need to see some signs of
Yeah, well, I'll just finish up on the PLS because they hadn't quite done, just to show the idea of this, where you've got that massive run, and then it did turn down, monthly downtrend there, turned, and now you can see every major red bar there just marching down and down and down, and that's still the case, but it is now down in that buy zone area of that whole wave. So it's, it's fallen from what, $5.60 down to $1.28, but it's still in that strong downtrend. There's no doubt about that. So what I need to see is, the monthly buy pivot or something like that coming out of there. If all of a sudden we get that, a nice big reversal in that buy zone, I'll start to go, okay, this is looking pretty interesting. But until then, yeah, like you said, you got to wait for signs of life. You don't just go in there and buy, because honestly, I've seen it too many times before. You think, oh, I'm getting a bargain here, and it's $1.50, and then all of a sudden it's 50 cents, and you're going, why the hell? Why the hell did I buy it at $1.50 when there was no reason to? There was no buy.
Absolutely.
I just thought it was cheap because used to be $6.
Yeah, and especially with commodities, they really need a narrative and a sentiment behind them to move. Otherwise, they can just go sideways for so long, because even if the lithium price stabilizes, to make more money, they need the price to go up, and for expectations that it's going to go up, kind of thing, to get a really good trade away. Anyway, well, thank you for doing that, Muzz. That's very interesting for me, because I have been curious about that idea for a long time. Actually, I wrote the same thing last year, and again, that's where the charts can help you go, well, it might be an idea, but is it, timing wise?
Does anyone else agree with you? Is it still a panic?
You do need someone else to buy the stock.
And the problem with a chart like that is, there's so many people out of the money, because you've already had that big run up to $6 and it's now at $1.50. I can tell you plenty of people still own it from $5 and are watching it every day, month after month, go down and down and down. And the pressure that you feel when you've put 50 grand into the stock, and now a few years later, that 50 grand's worth about 20, and falling nearly every day. I mean, the pressure just builds and builds and builds, and then at some point you reach your point of maximum head explosion and you just dump it. So there's a lot of weight above that stock, and there's currently a lot of people who are losing money who are just say, get me out, and they will push it beyond what is cheap. If you could make a fundamental value, this is actually pretty cheap. Doesn't matter. If there's a heap of people who are just in pain, just trying to get out, they'll push it to a stupid level, and then you can buy it there.
And we should say too, if the lithium, there's no guarantee the lithium price doesn't go lower.
Yeah.
Either. I mean, there's no floor for it. So, and that can make for a panicky situation too, of people just we'll salvage what we can. So, interesting stuff there. All right. Well, before we conclude, we did have a question from one of the readers saying, "Is Belvedere real?" Who's our video producer. So we did want to confirm that he is actually real. We've got a picture here of him up on the screen there. So that's him at work. Unusual fashion sense. Maz, for the last 3 weeks or so, you've been talking about the market just hitting that level, odds on to go down. So we're still in that same dynamic. The war holding everything in place, so it would take a really big individual catalyst to get a stock moving. So there doesn't seem to be much reward in taking on a lot of risk at the moment.
Yeah. I think it's stay long. I'm long. Stay long. Be positive, but be aware that it is probably a bit overbought in the short term, and there's a lot of uncertainty about. So let's see what pans out. But there's opportunities out there.
All right. So as always, if you've got a chart you're interested in, you want Murray to run it through his model and the way he looks at things, drop it in the notes. Give us a like if you like today's video. Don't forget to check out the link there with the new Microcap Maven coming in. I believe his identity shall remain mysterious for the moment. And we'll see you next week.
Excellent. All right. See you, mate.